Good morning, Paul Georgia from Allendale. It's October 19th, 2010. Well, the markets this morning are under pressure in the commodities anyway. The corn, soybeans, wheat, cattle, hogs are all expected to open lower here. Why? Because of the U.S. dollar. We've seen the dollar index change directions here overnight, and from being lower or marginally higher here even early this morning at 5:30, 6 o'clock, we have since jumped that market up to about 77 higher right now in the dollar index, all because of China announcing that they will raise their lending and deposit rates by 0.25%. That has sparked interest in the dollar and in turn created some profit taking and liquidation of the commodities. Gold market also down $15 to $20 here as we speak. Crude's down $1.14. Stock indexes are all lower to sharply lower here at this time. So we're going to have to monitor that very closely as we go along today, and we've got a lot of the grain markets, for instance, have been overbought. We need to see how far a correction takes us. Technically, the December corn has got support around this 550 area, and then there's a huge gap on the charts all the way down to about 528.5. So hopefully we can hold into that area somewhere. But that will be our target, and we'll have to see how well that market acts into that area. We have not seen much funds selling initially here today, and we're going to have to monitor that very closely of what kind of money flow comes into this market and pushes it lower. But on the other hand, we still have got tight supplies. We still are looking at some of the fundamental issues that we've been talking about here for the last several weeks, and that is we still have got dry weather in South America in growing areas, although there is forecast for some moisture later on this weekend. It still is a spot that we're concerned about. Australia is still in a situation where there's dry in the west, too much rain in the eastern areas, so those factors we'll still have to monitor very closely. Other news, we've got China had their weekly corn auction. Only 22% of the offerings were sold. That's down from the 36% that was bought last week. U.S. harvest is moving very well, 68% complete versus 39% average. In the soybeans, 83% harvested versus 62% average there. And on the soybean charts, we've got support right where it closed last night at this 1170 area in the November contract. Next level of support is all the way down at the 1150 area, and then we've got a gap on a chart that could provide some support. So that area, and we'll have to monitor that very closely, and the market will give us a better clue on where we close here today rather than where we open. Over in the wheat, we've got some more demand coming in. Japan's in for 122,000 tons of food-grade wheat. Egypt in for 55 to 60,000 tons. So we still have some demand there. We did get a report out of India yesterday, or last night, that their largest wheat-producing state is expected to increase their production by about 12% this year. So that's a sizable increase there. They're attributing most of that to increased quality and higher quality seed that they've planted this year. So overall, we've got to watch the grain markets. They're overbought, but yet we have to monitor and see what kind of support comes in underneath this market. We do expect to see some support here, unless we would see a complete change in macroeconomics around the world. In the livestock, cutout values in the pork were lower yesterday, down 46. We've seen higher cutouts in beef, anywhere from $1.24 higher in choice to $1.95 higher in the select. We've seen a change in direction there also this morning. Early we had cattle higher, hogs were slightly lower. Now we're anywhere from 30 to 50 lower in the hogs and 20 to 30 in the cattle. And this tone or attitude set here at the Mercantile Exchange may have an impact on cash. We've been looking at and expecting cash markets to be $1 higher in the cattle this week. Hasn't been any trade yet, but if we do find some weakness, some selling pressure developing at the Mercantile Exchange, that cash trade may back off, and we may only see a steady market there. So those are things we're looking at Allendale. A lot of stuff going on right now. Stay in touch with Allendale's research. Check us out on the web or give us a call, 800-262-7538. We wish everybody a very successful day, and we'll talk to you tomorrow morning. Thank you.